Hello, everybody. So today we're going to be talking about the rejection trade. We've got a couple of different types of trades that we take, but in this video, we'll only be discussing the rejection trade so you won't get confused on the various types that we actually use within the methodology that we trade within with the Bulls and Bears trade group. So with this video, talking about the rejection trade, you have in front of you right now the rejection trade rules. Uh, Please view this video as many times as you need to get as good as you need to get with it. Uh, Continue to study the candlestick patterns. If you haven't already started doing that, you want to get good at understanding candlestick patterns because we use those to trade off of our key lines that we spoke about in the previous video. When you look at drawing those in, that's why it's very important to know how to draw in your zones and key lines, and also know how to recognize candlestick patterns when that happens, and then what we're going to be talking about here today in order for you to actually take a trade. All right, so I'm going to be using today the NinjaTrader platform to show you how to take a trade there and what that looks like. I actually have a market replay set up. I'm going to go over here in just a minute, but before I do that, I want to go through here the rules of taking a rejection trade so you don't get confused on this. All right. So rule number one, as with any trade that we take, it must be off of a key line. Again, we talked about in the previous video about the key line and how you draw that in off an indecisive candle, followed by a strong move away from that indecision. Then you're waiting on the market to come back to that area, right? Number two, only take a rejection trade on the first or second rejection of the key line. We'll get into a little bit how that looks as we start looking at the chart and look at our example. But when you look at rejection trades, and we'll talk about first and second rejection, as we talked about previously on the previous video, as to how to draw in your zones and key lines, we mentioned briefly about the touches of that key line. We kind of changed the methodology, not methodology, but the terminology. Instead of calling it touches, we want to look at the full rejection pattern coming off of that key line within the time frame of the key line. So the first rejection, we want to be looking at first time the key line is being interacted with, we look for a rejection on that first interaction. So first rejection on the first interaction. Second time the market comes back to that area of the key line, we look for a second rejection of it. Then on the third time, we're going to be looking for the market to break that, going to the other side of the key line to continue past it, and then a retest of that key line. We're not going into that trade on this video, but just understand those rules. It's first rejection, second rejection, third time we look for a break and retest. All right. Number three, you must have a candlestick pattern to take the trade on a rejection trade. You must have a candlestick pattern. And rule number four, the candlestick pattern must be in the proper time frame based on the time frame of the key line rejection. So here I have a little grid for you, or a table that shows you the time frame of the key line and where you should be looking for your candlestick pattern to take your trade. So if you have a time frame of a 4-hour key line, you should be looking on the 4-hour for a candlestick. You can look at the 1 hour. You can also go down as low as the 30-minute time frame to see where that particular candlestick pattern will be created. On 4-hour key line interactions or rejection trades, I usually go drop down to the 30-minute to find my closest entry that I can find. So the smaller the time frame you go to, the better the entry you're going to get in most cases. Shorter stop loss going to be in the 30-minute time frame. So think of it that way. If you're taking a 4-hour trade, off a 4-hour key line in the 4-hour time frame, looking for a pattern in the 4-hour time frame, then you're going to have a much larger stop loss. So you got to look at it that way when you look at, okay, well, what time frame should I be looking to take the trade off of this key line? That's going to depend upon your account size, how much of a stop loss can your account handle. So look at it that way in terms of which time frame you're going to be taking that trade out of. 4-hour, you can look at 4-hour, 1-hour, and as low as the 30-minute. On a 1-hour key line, you can be looking at the 1-hour, 30-minute, or go as low as the 15-minute. Okay? And on a 30-minute key line, because we do at times draw in 30-minute key lines, especially on NASDAQ or some of the other indices, you will draw in 30-minute key lines. Then you want to be looking at your 30-minute for a candlestick pattern, your 15-minute, and as low as the 5-minute. Now, when you are just starting out trading this and just learning this, I recommend that you solely stay with 4-hour key lines, first and second rejection trades, with 4-hour, 1-hour, 30-minute candlestick patterns off of that key line. Okay, I would not go any lower than that to take a trade when you are just starting out, because you can get a little confused on these different looks of key lines. So you take it step by step. When you're just starting out, get good at the 4-hour key line trades, using a 30-minute candlestick pattern, or any one of those 4-hour, 1-hour, 30-minute candlestick pattern. But get used to understanding that the processes of what we go through to find these trades. Okay, always remember that when you are looking at zones, there are new zones being created on the hour, on every 30-minute. Okay, so every 30 minutes, you should be looking for a new 30-minute zone if you're looking to trade 30-minute zones in indices. I wouldn't do no Forex at all, honestly. Forex patterns, for the most part, I would stay higher time frames on Forex patterns, all of them. Just my suggestion. So 4-hour key line, look for your patterns in 30-minute time frames. Stay away from the 1-hour, 30-minute trades initially when you're just learning this process. So that means you should never be in the 5-minute time frame when you're just starting out. There shouldn't be a question. Okay. All right. So let's move forward here. So I'll make this very long. So make sure you note these rules for taking the trades, and let's switch up here and go to looking at a chart real quick. And I have an example of a 4-hour first touch rejection. I want to call it first rejection trade. I want to share screen here, get the right screen. 1 second. Okay, so what you have here is the micro NQ charts. I have on the left side a 4-hour chart, and on the right side you have a 30-minute. I wanted to show you here so you can get an idea of where the key line is being touched and rejected from on this 4-hour time frame. Drawing that key line. Okay, and where it is here on the 30-minute, already drawn in, as you can see here, from that 4-hour. And we're just going to play. I'll speed this up some. So what we're looking for, if you look at your 4-hour time frame, we're looking for an interaction with the key line. And you can see here, we got 2 hours, 56 minutes left on this current candle in the 4-hour. On the 30 minutes, you've got 25 minutes, 15 seconds or so. Going at a speed of 15 times here. We'll speed it up a little more here. I can get there for the sake of time on this video. Slow it down as we're getting closer. Not close there, didn't quite touch it yet. We want to wait for a rejection off of that key line before we do anything. So at this point, we would be looking at the 4 hours to see if we're getting this rejection, or waiting for it to interact with the key line on the 4 hour first. Excuse me. A little bit. And sometimes just got to be a little patient. Remember, we're like at 7:26. Okay, here we have our interaction with the key line. And remember, we're looking for a rejection off of the key line. So at this point, still over here looking at this 4 hour chart, because I'm looking for a rejection candle, a wick, basically, coming off of the key line. Right now, looks like it wants to try to break this key line, but remember, we're looking at the first time this has come back to this area. So the probability is that we are going to get a rejection off of this key line. Let me speed it up some. And right now, there's still no trade to take. Okay, so now if you look at this 4 hour over here, you can see what's happening with what the look is on the 4 hour versus the 30-minute at this point. We're still not getting the rejection that we're looking for off of this key line to take it back down. So there's no need to do anything at this point as of yet. Now, also remember, normally we would be looking at this in a 4 hour time frame. Then I would drop down to the 30 once I get the look I want to see over here. Okay, I'm just doing the side by side so you can get a perspective of what is happening with the candlesticks. You can see we've gone to a new candle on the 30-minute. And at the 30-minute point, what I would have been doing is looking at, see if there's any new zones created off of this, which I could draw a zone here on the 30, but I'm not going to worry about that at this point. Still looking for my rejection off the 4 hour time frame. Keep your eyes over here on this 4 hour. But let me do it this way so you don't get engulfed in that. So we're looking at this 4 hour. We are looking for a rejection to show on this candle off of this key line before we drop down to the 30-minute. So now I'm starting to see some rejection show itself. It's playing back and forth a little bit, but that's okay. Still early. And no need to be in a rush here. Wait to see what we want to see before we do anything. Okay, so now I'm starting to see this rejection a little bit more here. And I talk about the rejection, I'm talking about the space between the body, this wick being created off, and the bodies being smaller and smaller on this candle in the 4 hour. And you're getting the space between the body and the key line. And you see that wick. That is the rejection that we want to see. The wick is rejection of Christ. Okay. Still kind of hanging around there. Well, I want to see it come off of that key line before I worry about doing anything. Okay, starting to see that here. I was going back and forth, but at this point, I'm going to come over so you can see the 30-minute and see what's happening there. So now I've got this pattern happening. Let me slow it down. So I'm at 1, 2, 1 seconds. Okay, here. Now is where I would place this trade. Well, 3 pips or so, points, as I say. The sell market order below that candle. It's actually not quite 3. Go for that. Excuse me. And I'm going to pause it here just a second. So what I've done is I've waited for the rejection to show on the 4-hour chart. You can see that right here. Now I drop down to the 30-minute and I'm looking for a pattern to trade off of in the 30-minute time frame, because that's the lowest I can go, to take this to the downside. So while this is happening, there's a couple things you need to be doing. You need to be looking at, okay, where are you going to enter this trade, if there is a trade to take? Because again, we want to see a pattern. So what I'm seeing, this is not quite a harami being smaller candle that's inside a bigger candle, and you want it to be truly inside, not equal. That's not really harami. But it's close to being one. So I could have used that, but I'll say I'll wait on the next candle and see what happens. This candle went all the way up here, made a new high, and came back down, basically giving you the look of what we call a kangaroo tail. You look in your Forex, Naked Forex book, talks about the kangaroo tail. Also, this could be known as a shooting star, where you get the wick at a high, comes back in, closes inside the range of the previous candle, which of course it very much is well below. In this case, it's almost making a evening star pattern, if it was come more so down here, but it's close enough for me to want to take a trade off of this area. Now, I could do this a couple of different ways. I could look at this and say, I'm just going to enter the market right now at the close of that candle and click the sell. I could have done that and then set my stop loss, which is going to be about 20 points, and set my take profit. Look to where most likely I'll be looking to take this trade to. In this case, what I'm going to do is set it a pending order, 3 to 5 pips below. I usually use 3, really a max of 3. Below this candle to take a sell to the downside. And then what I'm going to do is set my stop loss above the highest wick, in this case of structure, 3 to 5 points above the structure of this move. Okay. But with Ninja, you have to wait until you're in the trade before you can set your stop loss. Mine is going to set it automatically because I have this set as an ATM strategy, just so I always put a stop loss on and I just maneuver it where I need it to be based on where it gets me into the trade. But this is going to be approximately about a 20 or so, maybe a little bit less stop loss. And I'm going to be looking to take it. A couple of areas that I would look at would be here, because that's 30-minute zone that it most likely could go to give me 42. It's going to be 22, not quite 20 points there. So I'm going to go a little bit beyond that, but I want at least 20. Optimally, you would like for your trades to go 4-hour to 4-hour zone. But this particular situation, we are in an uptrend. So we're kind of looking at going against this a little bit against the trend, which is okay, because this is a first touch situation, not called a first touch, first rejection off of the 4-hour key line, which is a high probability trade. So I'm going to look at some areas here that I might be interested in taking this trade. Beyond this point here, I've got this area down here that's above this 4-hour key line that I drew in the history. You see that from where it came from over here. So it could be up in this area. If I said, all right, let me take my profits up in here, I could do that as well. Could also come up here and look at this point. There's a couple of different areas. One way you see that is to go to a line chart, and you can see the different areas. So here would be one, could come down to here, this little point, it could come down to here, could come down to here, all the way down to here. Just looking at the different points in the past of where the market could react to certain areas. Once it gets past this, good chance it will come all the way back down here, because you really have nothing within this area looking at this line chart. Okay, just another way to look at it. So in this case, what I'm going to do is set it up in this area. And in that case, if I got in at 12,742, 12,742.75. Let's see. 742.75. And I got out at 12,692. 692. That would be a 50.75 point trade if it got down to that point, which is a very nice trade. But let's just see what happens. Anywhere down here, I'm pretty much good with it, to be honest with you. But I'm going to wait till we get into the trade first and see if we can get down to these areas. All right. Now, again, because this is going against the trend of the market, so to speak, if you look at this in a top-down perspective from the daily, the 4-hour, you see it going in an uptrend area. Anytime you take a trade against, you may not be able to get back to the next 4-hour zone. So you look at where it most likely will give you some hangups based on the structure or previous structure. Okay. But because this is a first rejection trade off a 4-hour key line, it's very good. And we see all this happening here. Once it gets past this area, we're looking pretty good to get back to this 4-hour zone. But I'm going to look somewhere up in here just for the sake of saying just how I trade. Okay, so let's go ahead and go forward. Press play. See what happens. Speed it up a little bit. There we go. We are in the trade. Stop loss has been set up here. I'm gonna digest a little bit. And we're looking, again, take profit somewhere up in here. I'm gonna say up in this area. So what I'll do is set I'm selling, so I'll set a buy limit. Remember, this is Ninja Trader, so it's done a little bit differently here. And we'll just sit back and let it do what it do. And I'll speed this up for you. Hopefully this has helped you guys to understand the process of what we go through getting into trades, what we look for, at least to this point, the mechanics of at least a 4-hour rejection in a 30-minute entry with a pattern. The main thing I want you to see here. And speed it up some. Okay. Now you can see here I show points when I trade. I don't show dollars. The reason is because when you start looking at dollars, you start to forget about the structure of what you're looking at, okay? I always tell people stop looking at dollars when you trade. Look at points and pips, whatever it is you're trading. Get away from looking at those dollars, because dollars don't take care of itself when the points are doing what they're doing what are supposed to do. And we're about $1. I said this area, you got to get some hang-ups here, which is fine. Go right through that, which is wonderful. Slow it down for you. Right, get close to open. And there you go. So you can see basically how this works. Market does what it's supposed to do when you trade accordingly. Didn't have to wait for this 4 hour to close before I took that trade. Simply interacted with the key line, dropped to the 30 minutes, saw my pattern, and took the trade, as you can see. Okay, go ahead and end this video here. If you guys have any questions about this, you're welcome to talk to us in the Telegram group. If you're not in the Telegram group watching this, please get in contact with somebody so they can get you in, so we can bring you along. But hopefully this helps you with understanding how to trade using the 4 hour zone, dropping down to the 30 minute. Again, I could have used the hour as well, but in this case, I used the 30 minute because I like the smaller stop loss that's available within it. This could be done again on any key line zone as long as you understand the parameters of where you should be in terms of taking those trades. All right, you guys have a great one. See you on the next video.